gold as money and sound money for millennia is kind of your lifeboat. It gets you from point A to point B in the storm because it retains its value. Fiat currency, or going back to the Roman times, even coinage just becomes depreciating, devalued over time, where they're shaving the edges off the coins to make more coins back into the late Roman Empire, that sort of thing. And obviously people have seen, the charge, the purchasing power of the dollar since the creation of the Federal Reserve, and all that kind of stuff. Gold is your ship. It allows you to convert your accumulated net worth, since it's, not really fungible to the extreme that you can use it to buy anything with it, one for one, like a gram of gold or something. But it's a way to protect your accumulated net worth, your financial net worth, as we move from one system to the next, because invariably the way this has always worked out, you start out like we did after Bretton Woods with a sound money system of a gold-backed US dollar. And then you end up over here on the other side of the pendulum with completely free, unbacked, nothingness being printed to infinity. And then the economy, the world, your country, whatever, loses confidence in the future value of that, Weimar Republic kind of stuff. And then the only way you can reestablish confidence is to swing all the way back over to the other side and restart over with sound money. So that's why gold is your ship to navigate, this pendulum swing. Silver, on the other hand, is a kind of a two-pronged thing. It's the pricing system at this point where we trade futures contracts to determine the price, and the futures contract, can fluctuate 5 or 6% in a day like they did, earlier this week. I recognize silver more as an undervalued asset play. It additionally is something that if you've got physical silver on hand and there's ever a, shut down the ATM kind of scenario, I think you can barter with it. You could take a roll of Silver Eagles and exchange it for a side of beef, or something like that. There's a more fungible value to silver than there is to gold. So in simplest terms, gold protects your well-being and silver protects your ability to buy stuff. Besides being what I still think is an extraordinary capital gain opportunity. My personal currency reserves, let's put it that way, are in dollars. I get paid in dollars, I keep it in dollars, and everything is dollar denominated. But you look around the world now, and all these central banks outside of the US are taking their own sovereign, if you will, currency, gold, dollar reserves, and they're buying gold. I mean, it's more central bank demand for gold than any, that we've seen in 50 years. All they're doing is basically what I've been doing. They're taking, they do international trade. They get dollars, as a trading vehicle. They're stuck with a pile of them, and you can put them in treasuries or whatever, or, you just keep in dollars. Eventually you swap those out for something more tangible, gold, and they're not doing that all of their entire balance sheet that way, which is why as an investor, I don't have every dollar of mine in gold either. All of the metals are the same way. I mean, whether it's gold and silver or it's the industrial metals like copper and zinc and lead and nickel, they all have the same kind of pricing scheme, the same kind of structure where there's a futures price and then there's a physical location or two where the metal is flowed out at that price to give it legitimacy. Well, the stockpiles, the global stockpiles, and I wrote about this again in this year's annual forecast, the global stockpiles of all those base metals is just continually going like this. I saw a thing on zinc yesterday that, it used to be 300,000 metric tons of zinc in London. There's now 20,000. So what happens if one of those markets somewhere runs out of metal? And then people sit back, investors go, well, wait a second. I know that's zinc, but maybe that's also like that in copper. Maybe that's also like that in silver. And you get this kind of a bank run, a confidence run, where signing here and waiting 60 days ain't going to cut it. I want it now, an old-fashioned bank run. That forces an unwind of all that leverage. And that's why I said Zoltan Posar, he's this kind of Fed watcher, interest rate observer, used to be the guy you'd always go to anytime there was like liquidity issues in the system. And he, since March of last year, and when the U.S. kicked Russia out of SWIFT and the like, he's been writing about a new Bretton Woods system, how these other countries are going to recognize that, being kind of hostage to this dollar-based system may not be in their best interest long term. And so he's been writing about that quite a bit, getting a lot of publicity for it. But in his most recent missive at the end of December, he, not me, not just dopey old me out here in Kansas. This guy, Zoltan Posar, said that is this rehypothecation of all of this physical metal, be it gold, silver, whatever, is an existential threat to the global financial system and the banking system, because they've levered all that this huge risk they've taken, like in 2008 with all this, the credit default swaps and all the obligations these banks took on that they couldn't back up. And so it's not just me that recognizes it, it's all out there. And so that leverage of one physical ounce to however many beneficial owners it has, that forced unwind when that day comes is going to be eye-opening. And I don't know what my gold and silver will be worth at that point, but it's probably not going to be $1,900 for gold and $25 for silver. See, that, I guess in a way, this gets to, again, 12 years of doing this, I get asked all the time, well, if $1,900 an ounce, we all think it's going to go higher than that, what is the fair price? And I don't know, because what's price? Price is dollars per ounce. It's a fraction. And I don't know how many ounces there are. Like you look on the COMEX, there's 500,000 contracts of open interest. Now look, don't get me wrong. This is not a COMEX is going to default, all that kind of jazz. But this just gives you an idea of the leverage. There's 500,000 contracts of open interest. Each contract is 100 ounces. Okay. So we're talking there's 50 million ounces of digital gold floating around. What is there? 25 million ounces in the vaults. So what's that, 20 times? Okay. Then that's just one place. Again, how many times levered, how much gold is freely, and this is a whole other story, but we can talk about the GLD and some of these other ETFs, or talk about some of these unallocated account things. You walk into a Swiss bank, or even in Canada, they have banks that sell you a certificate. Well, this is a gold certificate. It's as good as gold. Well, is it? Can I get my gold? Well, sign here. You get it in 60 days. Well, how many of those are floating around out there?